谢谢 Jonathan。那接下来让我们欢迎伦交所集团旗下富时罗素可持续投资高级研究主管 Lily 戴。Lily 负责可持续投资研究，重点是绿色经济和分类法。Lily 代表 LSEG 作为英国绿色技术咨询小组和新加坡绿色金融业特别工作组的成员。Lily 也曾在气候债券倡议组织工作，负责管理绿色基金金融发展项目，并领导绿色债券市场标准和政策的研究。Lily 还与欧盟委员会可持续金融技术专家组合作，促进建立统一的欧盟可持续金融分类标准，并为EMEA和亚洲的监管机构和政策制定者提供有关绿色金融指南的政策建议。Hi, Lily. Welcome to this interview.
Thank you for the introduction and thank you for having me here. My name is Lily Dai. I'm a senior research lead at FTSE Russell Sustainable Investment Research Team, and I'm focusing on developing my IP methodology and research on sustainable and ESG data with a specific focus on green revenues and taxonomies.
You are very welcome, Lily. So my first question for you is, what do you think are the main drivers of the growth of ESG investing and data?
Yeah, sure. I think there are a few drivers. Definitely investors play a very important role here. So if you look at the roots of ESG investing, it can be traced back to ethical investing in the 18th century, when methodists started to outline business ethics to avoid investment in industries where workers were treated poorly. And then the concept of socially responsible investing strategy began to emerge from the 1960s onwards. Only until I think early 2000, the term ESG started to gain more broader usage, in particular following its formal definition in the UA Global Compact from 2004, and of course the launch of the UN Principles for Responsible Investors in 2006. If you look at the PRI, I think now they have over 3,000 signatures from investors. And it was quite funny because back in 2002, we actually launched the FTSE for Good Index, which cover companies meeting certain ESG performance thresholds. Back then in the UK, I think a newspaper called it a silly index because the ESG is still quite niche or sometimes irrelevant to some investors. But now I think after 2 decades, we can see the significant change in investment approaches in ESG. I think financial institutions around the world, including sovereign wealth funds, pension funds, insurance companies, asset managers, and banks, now are starting to incorporate sustainability into their process as a matter of course. And now you can see many investors-led initiatives such as Transition Pathway Initiative and Climate Action 100 Plus, which are driving the innovation or future iteration of ESG and sustainable investment data. And of course, I think secondly, the general climate awareness of the impact of environmental and climate change risks on the financial system has been another catalyst for the development of sustainable finance. For example, if you look at the green bond market, in particular after Paris Agreement in 2015, it has been doubling every year. And the Task Force on Climate-Related Financial Disclosure, which was launched in 2015, that guides corporate disclosure on climate-related financial risks. It enables investors, lenders, and insurance to better understand the impact of climate change. And thirdly, I think regulation also provide a supporting role here. If you look at the taxonomy's development, which defines what is sustainable activities, right now there are about over 30 countries have been developing taxonomies with disclosure regulations, including I think Europe, China, the UK, and Singapore, etc. It can facilitate the growth of ESG investing and make sure that the market is robust.
Can you also give us some examples about how ESG data is being used for portfolio or benchmark construction?
Sure. I think the term ESG or sustainable investment data is quite broad. So if you look at what's included, we have traditional ESG score. You can have an overall score for the company. You can also break them down into different kind of metrics, including climate, including social governance, water, pollution, etc. We also have specific climate metrics, including carbon emissions or climate physical risks. And we have data like green revenues, which is more focusing on what does a company do instead of how the company is operating. This data set measures company revenues from green activities such as renewable energy, pollution control, and low carbon transports. And there are many different other kind of ESG data as well. And then I think if you use single data or you use a combination of different data sets, you can deliver different portfolio and a benchmark depending on your investment strategy. I think a few examples here. The first one, if we look at the FTSE TPI climate index, it captures the risks and opportunities arising from the climate transition, i.e. the shift to a low carbon economy through a few aspects, including fossil fuel reserves. So we basically underweight companies with fossil fuel reserves, which I think they are exposed to more climate risks. And we also have carbon emissions. We overall underweight them according to their emissions. And we also have green revenues. We basically overweight companies that are generating revenues from the global green economy, meaning that they are exposed to more business opportunities in the low carbon economy transition. We also have included management quality, which measures how companies are managing the risks and opportunities related to the low carbon transitions, so we can over or underweight them based on their strategies. And of course, we have also the carbon performance metrics, so not only carbon emissions, but we also assess whether the company is actually on track of the 2-degree or below 2-degree trajectory. And based on that, we can overweight and underweight the company in the portfolio. So that's the first example of the FTSE TPI climate index. And secondly, I think now it's quite popular in the market, which is Paris aligned benchmark. This is actually a part of the EU regulation, but I think we also designed an index for investors specifically looking at decarbonization strategy. So this index, we use carbon emissions data because the benchmark needs to achieve 50% emission reduction based on regulation. But we also apply strategies like exclusion. So we exclude a company with more than 50% revenues from fossil fuel business. And we increase the exposure to companies with green revenues. And we will also use the TPI data I described earlier. So that's the second example for the FTSE Paris aligned benchmark, which is, I think, more sophisticated. And then we have the third example, which is more straightforward. So it's called FTSE Environmental Opportunities All-Share or FTSE Environmental Technologies 100. This is part of our Environmental Markets Index series, which captures investment opportunities in the green economy. This is a selection index which covers companies with more than 20% or 50% green revenues. And it's quite broad in terms of the green sectors. So you can look at sub-index if you are, if an investor is specifically focusing on some green sectors, like I think management, energy management efficiency is the largest green sector. And of course, renewable energy, water infrastructure and waste management, etc. And if you look at the performance of this index, I think it has been outperforming in very long term from 2009, outperform both the benchmark and oil gas industries. For example, if we look at the 5-year performance, this index has been outperforming the global benchmark by 6% and oil gas by 20%. But of course, I think so far in early this year, their short-term performance has been quite challenging, with greener equities selling off faster than the wider markets. But I think despite this, the longer term drivers of the green economy or of this index remain, such as an increasing focus on climate finance, investors' interest in sustainable investments, and green taxonomies, I think, developing all around the world. So they are likely to continue channeling capital towards the low carbon transition over time.
Thanks, Lily. Here comes to my last question for you. What are the key challenges in ESG on sustainable investing?
Yeah, it's a very good question. I think fundamental to the ESG investing or the portfolio or index construction we have been discussing is the transparency and corporate disclosure. So even the ESG has been, I think, developing for 20 years. Generally, the corporate disclosure is still not, I think the quality is still not very good. And for example, I think in the case of green revenues, only 25% of the companies actually fully disclose their revenue from green products or services. So I think the corporate engagement is quite important here. So we normally engage with companies for additional information so we can improve the accuracy of our assessments. I think secondly is the definition of ESG or sustainable, in particular the or the taxonomy's development around world. I think first, it's not an easy job to develop a taxonomy because we have to take into consideration the climate science development, the emerging product and services in the market, and of course the environmental objectives. For example, I think the EU has been extending taxonomy to social objectives as well. So we have been developing kind of taxonomy, or we call green revenues classification system since I think 10 years ago. So we understand this very well, that this is actually an ongoing process and it's not very easy. And of course, I think if you look at all the taxonomies around the world, they are most of them are quite aligned, given that we are pursuing same environmental objectives, because the environmental challenges like climate change is actually global, but they are always a little bit different, because different countries might have different pathways to achieve the low carbon transition. So it's actually challenging to keep track and have granular data to make sure we can measure activities across jurisdictions. I think right now there's a collaboration between China and the EU under the Common Ground taxonomy to improve the interpretability of the sustainable taxonomies. And so I think the last point I want to share, it's not like a challenging, but it's something quite important, is the engagement with the whole ecosystem. I think there are many initiatives out there in the market now, such as the Net Zero Asset Owner Alliance, Net Zero Asset Managers Initiative, and the Glasgow Financial Alliance for Net Zero, GFANZ. So I think it's quite important to engage with them to understand the momentum and the trend in the market when we develop investment strategy and integrate ESG or asset data in the portfolio or in the investment. Thank you. It's very nice to have me here. Thank you.